Today's market call is presented by Robinhood. Elevate your trading with Robinhood Legend, the sleek, free, customizable desktop platform built for active traders. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. Sleek, free, and customizable. 3 words I would use to describe Dan Nathan, who is back from his sojourn in California. It is Wednesday. It is September 17th. It is 11 a.m. on the East Coast. It is market call. If it's Wednesday, Dan, it's
Butters. Pitch.
John Butters, of course, of FactSet. You see that little pause there? Because you didn't know what I was going to say. You never know with me. You just
he's the senior earnings analyst at FactSet. Every Friday, he writes the Earnings Insight blog. You can have it in your inbox, but you're also going to get a preview from us earlier in the week in Market Call. He's talking about buy ratings, sell ratings, hold ratings. We're going to get to all that. But first,
this is the first time we've been together in a while. I was away last week.
Yep.
You've been in California on a work assignment. I just like saying that because it's fun.
Is that what you're saying? Is that what you're saying?
Well, no, it was Carter Braxton-Worth and myself on Monday. We had Danny Moses.
Demo. That's a great squad right yesterday. There. That is a great squad. Lot going on. I suspect, Guy, you did a lot of previewing at the big Fed meeting today, the last couple of days. I missed some of the pods.
Well, I talked to Peter Bookvar yesterday. I talked to Elizabeth Thomas on Monday.
I'll just say one thing, Guy. How lucky are we in the last 2 days? You got to do a podcast with Carter, Danny, Liz, and Peter, and not me. That's probably the best part. Oh, Bill just said, yeah. No, but how cool is that? Like, you know what? For any of you guys who are saying, you know what, I'm sick of Dan and Guy. They've been podcasting together. How many years now, Guy? If we make it to January,
it's going to be 5.
But how lucky are we that we have this group of people that we can just talk markets with, and we do different things with them. Some is macro, some is technical, some is tech. You know what I mean?
I do know what you mean, and we are fortunate. I agree with that. And we're also fortunate to have a market that is a bit of a divergence today. We're seeing a big move higher and down, and that's obviously, as you said prior to the show, not the best formulator to constructive index of all time. But you have obviously sell-off in the NASDAQ, S&P basically flat to slightly lower. But here we are getting ready for this Fed announcement, whatever that is, and whatever questions and answers on the back end. But I wanted to start with this. If Amanda can throw up this little tweet from Marco, I'll read it, but you can see it. China took a shot at the heart of the U.S. market today in terms of NVIDIA. On the Fed day, U.S. tech complex down big. He names the names, but indices held near flat by non-tech. If the Fed surprises hawkish and the support caves, it could be a full-blown crash. Now, listen, I don't know if I've ever used that term because I don't like to be hyperbolic, but, Marco's sort of reading the tea leaves here. And, listen, I think he's trying to put himself out there and be, whatever. What's the word I'm looking for?
Provocative, Guy. He's trying to be
provocative, but here we are. And listen, in terms of NVIDIA, you got to wonder what's going on here. And Danny Moses texted me earlier today, and we had talked about existential risks to the market and exogenous events. And, maybe this NVIDIA, this salvo from the Chinese is a potentially start of something.
Yeah, I mean, all right, let's take a step back. Okay, so, Guy, we know that, they had the big meeting. I don't know, it was Madrid, right? Like, they're all right, let's take a step back further. So any trade deals, and if you're listening to this, I'm doing this in air quotes here, people, we had frameworks. Like, that's all we had. The administration was saying, we got a deal. There's no deals in place. We haven't signed any deals, right? So China, here we are, and this has been ongoing. This is the big win. You talk about it all the time. You say, and I don't mean too much, I'm just saying you highlight the fact that this is an administration that likes to be able to tweet out, we have a deal, like that sort of thing. So if you think about what's the back and forth in China has been going back 3-4 months, it's like they got the rare earths and we got the GPUs, right? And both need the other. But the difference between us and them is that if they tell their companies not to buy our GPUs, well, that gives them the leverage because we still need the rare earths. Is that fair? And
I think that's very fair.
And then the other part of it is like we've been seeing the manufacturing data from China. Well, it was kind of stealing from Peter to pay Paul. Like we're importing less from them because we're so worried about that trade deficit, right? Well, they're shipping more stuff to other countries. And it's not too dissimilar than what we're talking about with oil and natural gas from Russia. Russia's no worse off for wear because India is buying more of it and some other nations. So I guess the point when I'm like making about a China deal, you can go to Madrid, you can have Besant meet with whoever, you can talk about having a framework. I have no idea why they're leading with TikTok. Like, is that guy to me like one of the most inconsequential parts of this whole deal? Like, seriously, I don't know how TikTok and who owns it is important to a trade deal, in my opinion. So now you have to say to yourself on a day like today, why is the Chinese doing it? To show that they have leverage? You know what I mean? Well,
I think that's exactly right. And it's not too dissimilar some of the other things we're seeing around the world in terms of, meetings and then subsequent actions that sort of fly in the face of said meetings. And I think that's going to continue. And it surprises me again that you have a volatility index that's, either side is sort of 16. And I do think maybe, and we talked about it with Danny yesterday, this quad witch on Friday, maybe you have a volatility event next week. We'll see. But in terms of NVIDIA real quick, and again, I want to emphasize, I think it's going lower, for a myriad of different reasons. And I think this is just one more reason. But we had there was a conversation with the CEO of IONQ. I don't know if Amanda wants to throw that chart up or not, but he basically said, I think it was on Bloomberg, and again, he's talking his book, but competition is coming. We're going to sort of surpass NVIDIA in 2027. And then he said that Blackwell, and I'm quoting here, is a bit of a joke, which again, talking your book, but the point I'm trying to make, and maybe not elegantly enough, is there is competition here coming in a myriad of different ways, and not least of which with the Chinese and what we're hearing out of Alibaba and different things, but it's coming in spades. And when you have those kinds of margins, it was the old Amazon thing. Your margins are our opportunity. And I think that's what the market is looking at in terms of NVIDIA and their chips.
Yeah, and it's not just NVIDIA. And, Doug Cass just sent us this, and he and I and you were like 100% in agreement. The way we were kind of breaking down this Oracle deal last week, I mean, I was screaming from the rooftops, whether it was here, whether it was on our podcast, whether it was on Fast Money. And, like, how are they gonna fund this? I mean, like it just doesn't make a lot of sense. And oh yeah, well, supposedly SoftBank is gonna back this aspect of it and OpenAI, and they're gonna be able to do this. It's like, no, man, they have 3 or 4% of market share right now of the public cloud. So to build this out, it takes time, it takes a lot of money. Who knows if OpenAI is going to need all of this capacity, and then you think about the deal with TikTok. Well, dude, they already have TikTok's data, you know what I mean, in their cloud. So what is it incremental without any sort of, I don't know, like data or whatever. I'm sorry, I was on.
Well, there's no substance behind it. I mean, to your point, there's not a lot of substance behind it. And again, Oracle reported, I was away last week. People got very excited. The move that we saw in Oracle was similar to what we saw in Broadcom in December. To a certain extent in Microsoft after their earnings release, huge companies, huge market cap companies that are having these outsized moves, which I don't think are particularly normal. And, the market got excited about Oracle's revenue guide, but, they really didn't talk about potential. What are the earnings on that revenue? Right. And that's, to me, that's a pretty big element of this entire thing.
So, Guy, I did this the day of. And some people were looking at me like I had 3 heads. Okay. So the stock gapped up, it had a $250 billion market cap gain. They had talked about this backlog of 455 billion over 10 years, by the way. I think it was 10 years. Okay. And that, sorry, it was over
5 years, I think.
Yeah. It was over 5 years. Okay. So $250 billion for $300 million in revenue. So the backlog, was not the full bit of revenue that they guided to. So you're telling me the market is almost immediately valuing that revenue right here and right now at the value in which, they're guiding. That makes no sense. So you see that gap right there. That gap is going to get filled in. I'm just telling you. And I don't mean to sound so definitive about it, but this is a company that has not executed, over time. They're late to the game. I'm not telling you that they're mis-executing now. There's just too much hype about what they're doing. Now, let's go back to what you were saying about NVIDIA. You could have said the same thing, and you and I have been, about competition, about this ramp of product, Hopper to Blackwell to Rubin, and there's no evidence so far that folks need to upgrade to Blackwell, to Rubin, because these chips are doing just fine, the Hoppers with inference. Once you've trained all the models, all of the queries, all the little tasks that it's doing, it takes much less compute. So you don't need the highest end chips to, you know what I mean? So like, that's just a fact. So NVIDIA, it has not confirmed any of the new highs in the NASDAQ or the S&P over the last, few weeks or something like that. Come on, man. And they missed on data center. Slight miss, but they missed when they reported.
This to me sets up, again, you want to go back to January and look the way the stock traded in the aftermath of that earnings release. It did exactly what we're doing now. And then obviously you saw the subsequent move in April. I don't think we're going to the April levels, but if you go back and look what happened from peak to trough from December-ish until early April, I think you're setting up for that type of percentage move. Now, the first stop is going to be the 200-day moving average that we have outlined, which probably, if I had to look at it, like what, Dan, about 145 or something ish.
Yeah.
I'm guessing, but that's probably about right. And I think that's where we're headed. Then sort of we'll wait and see what happens if and when. But I don't think NVIDIA's traded particularly well, and it shouldn't have traded particularly well post earnings, despite the fact that the S&P is at an all-time high. A couple things that we have been highlighting, if we can, for a minute. We talked about this K-Web. We said 38.5, 39, those tops that we had sort of had resistance. We thought it would get through. And here we are, Chinese internet stocks sort of on the move. And you look at this longer term, if you want to pull this up, to me at least, this is a pretty classic bearish to bullish reversal. And this goes back to 2022. So, this thing to me, maybe I'm wrong, but I think it's just getting started here. And I think there's still a significant move left. You can play the ETF, or you can play individual names in that ETF, but I think they're all going to work right now.
Yeah. And, Porter Collins and, Vinny Daniels, they mentioned Baidu as a name. I think on the podcast they did with Danny last week of the On the Tape podcast fame, talking about these names. Baidu is a name we were talking about, because Baidu, I don't know, the rumor, if you will, this is a few months ago, that they were going to basically have the cloud deal for Apple Intelligence, just like TikTok is going to have to actually have locally domiciled, cloud infrastructure here for the user data and for some sort of oversight of the algorithm. The same thing was going to have to be the case for Apple. And so Baidu was the expected one to get that. It was trading at cash, and you and I highlighted that a bit because it was lagging Alibaba, a good bit over the last, few months or so. So that one has worked. I mean, the idea of chasing it here, it's one thing to look at that thing on a 5-year basis. You look at this on a short-term basis. The last time we saw that, we saw a meaningful pullback, right? This was going back to, I want to say last fall. Does that sound right? Where it was about a year ago. Remember, Tepper comes on CNBC, says buy everything in China that's not bolted down. But I do think it's interesting that the Chinese tech stocks are taking off as ours seemingly are stalling, at least in that space.
I don't think it's coincidental, but we'll see. I mean, I agree with you in terms of the chase here. Maybe it's the wrong time. I think we've done a decent job with those names. I mean, Alibaba's been, I don't want to say historic, but I mean, the movement we've seen over the last 8 or 9 months in Alibaba's been tremendous. But put up Baidu real quick, because I do think there's room to about 155 or so. And you say, well, where do you get that level? Well, if you go back to the spring and summer of 2023, that's where it sort of topped out at a couple times. And you can draw that horizontal line across those. Yeah, you just boom, right there. So that's where I think we're sort of headed towards. Now, does it get there in a straight line? I don't know, but I think there's a better chance that it gets to 155 before it sort of does the back and fill to, the mid 120s or so. So I think you stay with these names here, Dan.
Yeah. I mean, if you're long them, possibly, I just don't like parabolic things like that. You know what I'm saying? So like, that's just me. Let's look at just really quickly, Guy, pull up Lyft here, people. This one, they signed a deal with Waymo. I got to tell you, So I was in LA. I probably took 10 Waymos over the last 3 days. It is literally like being in a sci-fi movie. It's just so awesome. Like every time I go to San Francisco or I go to LA, I use them. And the first time I was in with somebody last night who'd never been in one, and it was Max Myers, by the way. And he's like a bit of a Luddite, kind of like you guy, and I say that affectionately. And he's like, this is like, it took him like a minute to be like, this is the coolest effing thing I've ever done, because you just watch it. I know you're gonna say,
No, I didn't say anything.
Next time you and I are in California, I am literally going to make you come with me, okay, in one of these things.
No, I look forward to that.
Happen?
No, I just said I look forward to that. I don't know what else to say. I mean, when it's funny, you started it by saying it's like being in a sci-fi movie, and this is when we go our separate ways. I'm thinking that's horrible, that's horrific, and you said it's the coolest thing ever. So that's how you can look at the same thing and come up with two different conclusions. I think of a sci-fi movie as like, E.T., when, if you remember, the kids with the wands and stuff, they were running around. That's what I think of.
Oh my God.
No.
All right. No.
Making another one, apparently. I just read somewhere.
Really?
Yeah.
All right, let's do this.
I'm throwing you off the course.
We'll get back. All right, so let's look at the Lyft. You see this move right here. They do a deal with Waymo. Now let's throw the Uber up here, because I think this is pretty interesting too. So I wouldn't have expected Uber to be down on that news, guy. Uber's got deals with Waymo. That's a big move, isn't that?
It is
in your tube.
It is, but this. This is probably now the third time, maybe fourth time, we've seen Uber move lower on the back of some sort of Waymo headline. And it's probably all within the last year or so. And each time, at least that I can remember, I've said this is going to be short-lived in terms of the sell-off, and you want to try to take advantage of this. And I don't think it's any different here. So Uber's been a performer this year as well. Yes, along the way, it's had some downdrafts, most of the time on Waymo-like headlines, and I don't think it's any different this time.
Yeah. I mean, listen, that's still a good looking chart there. I think people are okay with the valuation. I think people are excited about the sort of deals that they can do with the likes of Waymo in different cities. And at least that kind of helps them defend their moat as it is right now. But they're going to have to actually come up with a strategy. Dara Khosrowshahi, who's the CEO, I want to say this a few months back, he had an interview or did an interview with Ben Thompson of Stratechery, and you guys should find it. This is a guy who's executed you could agree very, very well. Over the last, I think he's probably been there 6 or 7 years. Does that sound right?
That's right.
Brought the company public. He will have a strategy for self-driving. I mean, he just will, autonomous, like ride share, all that sort of stuff. So, the other thing I was going to say, when you are in a Waymo and you can ask yourself, is this going to scale? All right. Right now, the Waymos are these Jaguar SUVs. They're beautiful. They're comfortable. The experience is it is awesome. I'm just telling you. Okay. But then you look at all the hardware that's on top of it, the LiDAR, all the camera, all the stuff that's going on. The question, well, does it scale? I mean, like, that's the point. These cars are costing $150,000 to do. So it's not going to be and by the way, they're much cheaper than Uber, which is the same case when Uber was trying to take all that market share from cabs and that sort of thing. So you actually had, in this case, you have Google underwriting that discount to get people doing it. Back when Uber and Lyft were going, it was the VCs, it was their capital, right? But then you have to ask yourself, where the hell is Elon Musk? Because, okay, they're telling us about robotaxi, but full self-driving, that like 5% of people that own Teslas have full self-driving. And why is it that Waymo's got autonomous vehicles all over the road and Tesla doesn't? So you can say to yourself, what the heck's going on? I mean that. And if robotaxi is such a big part of the valuation right now, why are they not on the road? There's like 100 of them in Austin, or 500 or something like that.
I can't answer that because clearly I'm not their target audience. And, again, I have a scenario where, so you're in the back seat of and I don't want to get, I'm sorry, Amanda. By the way, Amanda's doing great. I don't want to get bogged down here, but you're in the back seat of these Jaguars. Is that correct?
Correct.
So, I mean, somebody out there with some hacker could lock the doors and take you on some joyride, theoretically. I mean, that's not out of the realm of possibility.
No. Let's talk.
So it could happen.
By the way,
Today is September 17th. I mentioned at the top of the show. I want to wish a happy birthday to Patrick Mahomes, who's 30 years old, the 0-2 Kansas City Chiefs, by the way, coming to MetLife Stadium to play the Giants. But that's not what's important. What's more important, and Amanda, please pull this up. Happy birthday to Wavy McFly, ladies and gentlemen. He is with us every day. So, Wavy, on behalf of the entire Risk Reversal team, very happy birthday.
All right, Jack CF has a question here, Guy, and this is kind of dovetails a little bit about that robotaxi conversation. Let's pull that up there. What's a good level to short Tesla, or is it just going up to rip to all-time highs this year? All right, well, this one's gotten a lot more difficult, right? So we had been highlighting, Carter had been highlighting, let's kind of pull it back a little bit, that wedge that was being created, Guy. While you were out last week, Carter was saying pair twos, I was looking at this, seeing it kind of slightly different, now let's tighten that thing up for a second here. So it wasn't just the wedge, but it was also, look where it was just 5 trading days ago, Guy. It was kind of up against that prior high. So it
355. Like, no, absolutely. Yep.
You had a series of higher lows. You were back up against 355. You also had that wedge. And it was also holding its 200-day moving average. It just felt like it wanted to
party.
Yeah, party. And a straight line. And then, here's the funny thing about this. So Elon on Friday bought $1 billion worth of stock. So do you think on Thursday somebody knew that? I mean that sincerely. Like, look at that. And then he puts out this tweet. If they can find this tweet, somebody's son. He's such a child. And you say, oh, Dan, you're hating in this and whatever. Well, he put out 2 tweets. Last week, he tweeted, the Democrats are the party of murder. And then he tweets out, 2 days later, a tweet that the stock is 69 at 420 or something like that. Like, he can be dangerous and he can be a child at the same time. It is fascinating. I'm just going to say that. And, I've been talking about this for the last few days. If Jamie Dimon tweeted out, Democrats are the party of murder, can you imagine what would be going on? Like his stock would be down. The board of directors would be convening. Look at you smirking. I mean, am I right? I'm just saying, what sort of world do we live in?
I mean, that's that's what's going on right now. There seemingly no repercussions or ramifications, and have at it. But I'll say this: you think about and his board of directors created this. I mean, they authorized $1 trillion pay package, and that's based on some milestones that he has to achieve. I think one of those milestones is probably stock price. Well, what better way to get your stock price higher than to announce something like that? It becomes self-fulfilling. I think he knew exactly what was going to happen with that announcement. By the way, whether it takes place or not, or took place, it doesn't even matter. I mean, I hope that it did take place, but you understand what I'm saying. So, I mean, but that's the environment that we find ourselves in. I mean, it's another example of people gaming the system, and that's a great example of it, I think.
Yeah, so just let's finish up on the Tesla, and I want to actually go to the chart guy on NVIDIA, because if we're talking about shorts, and I think you and I are going to be in agreement, like this one, go like this. Who knows, right? And even the puts are really pumped. The one thing I was saying late last week, Guy, is that the sentiment was really bad, that the expectations for Q3 deliveries was really low, right? And then you had this technical setup. It just looked like it wanted to do this sort of thing, not to this, it went up, 15% in a straight line. So the idea of trying to short this thing here, your guess is as good as mine, because if you look at the range that it's been from 350, you see where was it, 500 at those highs, you know what I mean? Like, who knows, man? It can make a run for that. Look at the move in November. Like, I just don't know. But let's go back to NVIDIA for a second, and then maybe I can drive here for
I like that
for a sec.
Robinhood.
I can drive. Yeah. So let me just take. So if you look at this, okay, yes, if you look at that RSI, it's basically pretty oversold. That's a 14-day. But look at this, Guy. If I draw this uptrend, right? Look and see where you see that it broke down, and then it had that gap and it rallied back up, but it got rejected at that uptrend, right? And so I look at this and I think about your levels. You were talking about 140 was the 200-day, but let's call it 153.4 was that sort of breakout level. We have the stock at 170. I mean, it really would not be hard to get that thing back there. And it just feels like there's been a turn, despite the fact that that RSI, like we just said, is getting a lot weaker. So, but then my question to you guys, what if we do have a deal, a framework? The Chinese say, okay, have a ball, people, buy as many of the H20s as you want, does the stock pop and go to new highs?
Yeah, that's a possibility. I think without question. I think the Chinese have also, though, drawn this line in the sand. So,
Yeah.
I mean, yes, that's a possibility. I don't think it's a distinct possibility, but I would move that trend line to the left a little bit, and you'll see something. If you move it up now, I can't see because you don't have an. So move up a little bit.
Oh, like
Yeah,
here,
go.
here, here.
So
Oh, you
here's
make the
all
same
right.
case.
So there's your uptrend line. Broken, trades back up to it, fails. I mean, that's one way to look at it as well. It's the same type of thing, but
It's the better trend line.
yeah,
You know
you broke
why?
trend, you went
Yeah.
off, you traded back up to the trend and failed. And that's why I think this thing is destined for the levels that we talked about. And again, this all comes sort of on the heels of their earnings release, which again, in terms of magnitude, the numbers are huge. But in terms of percentage beats now, they're getting smaller and smaller, which is the point we've been trying to make. And, maybe the market's starting to pay attention to it now.
Yeah, let's just go here for a second to the options chain here. I'm messing this up for a second. Okay, so this is NVIDIA, guy. Let's just kind of look at, let's go out a month. Okay, so here's October 17th. That's exactly a month, right? So if I use this and I go down to, you see that this is the at the money here, stocks trading at 170. So if you look at this 170 straddle, okay, it costs you 14 and a quarter. You do that math, 14 and a quarter by 170. What do you got there? You have a little less than 10%, right? So you have 8.5% or something like that. So if you just kind of look one way, it's going to be like 4.5%. Now you could say over the course of a month, you know what I mean? Like that's not great. But if you look at that 170 put and you pay $6.50, let's call it, your break even down there is 163.50, and you're playing for a move back to 150. Not a great risk reward. You know what I mean? And I know Robinhood just launched shorting on the platform. You and I are pretty much in the same camp. Like, not a huge fan of shorting stocks, especially stocks like this. I mean, would you agree with that for the most part?
It's become a difficult game. Our old adage was when you short something, it can go to infinity, and when you long something, it can go into zero. So, by definition, it's more dangerous than being long something. And we've also seen in this environment where short squeezes and different names have been very painful for people. So the short game is a difficult game at best. But the short game vis-a-vis options, if it makes sense, is a good game. But even so, forget about the short game or the options game. If you long the stock, you got to be tactical here, I think. And then you could have a view that this is going to be a $8 to $10 trillion company over the course of time. And maybe that comes to fruition, but it's not going to happen over the next couple months. And in NVIDIA specifically, I mean, we've seen some pretty significant downdrafts along the way. And regardless of where it is now, I am here to tell you, when that stock traded down to $90 in April, regardless of your conviction, you were shitting bricks in terms of being long NVIDIA. Now, a lot of people got bailed out with the subsequent market rally and everybody looks like geniuses, but on the way down, nobody was happy. And, I think the move percentage wise is we're setting up for a very similar type of situation.
Yeah. Let's go to SPY. We know we have the Fed meeting. We're going to talk about it for a second. You and I are also going to do a risk podcast right after the press, and that's going to be out later tonight. So you'll have it if you want to check that out. So we're not going to spend too much time on there. We know what expectations are for 25 basis point cut, but really people want to get a sense for, will we be in a cutting cycle? What do the dot plots say? What is going on with Lisa Cook? Is there going to be assault on the independence of the Fed? We know Stephen Mirren's in there. We know that the Supreme Court is ruling on the Lisa Cook thing. It is interesting. Do you see the headline today, guy, that Scott Bessent, Treasury Secretary, had like one of the...
I saw that dual residencies.
Why are you pooing it? I mean, it's
no, I'm not poo-pooing it.
Yeah.
I mean, I'm not. It's all this stuff around both, it's just exhausting at a certain point. I mean, Pulte going after her, and then Scott Bessent has the same thing. It's the back and forth is just exhausting.
Yeah, no, I mean, like the thing that's sad about it is like they're trying to ruin this woman's life for probably one of the more inconsequential sort of, you know what I mean, like sorts of things. And in the case of Scott Bessent, you know, the thing says, well, it's not exactly fraud, you know what I mean, like this, now, whatever. So it's probably not exactly fraud for her, whatever. Let's take a look at the SPY here, because guy, we have a VIX, what is it, about 15 or something like that. And when we look at this, it is interesting that this is not particularly oversold on an RSI, right? And if we look at this kind of level, the breakout level, what do we got? It's about 614 or so, guy. And if you look at that, we did see a check back to that. I could draw the line if that's helpful to you people right here. You see what I'm going to do here, guy? So this is kind of that support level. I can put a moving average in. I kind of just want to get that short exposure here, guy. So let's just look at this thing. If we're going to look out a month, okay, so right here we have a SPY trading at 659 or so. If you do that math, 659, and then what did we say that level was down there? It was 615. So let's just look at the 655, okay, in October, and then let's price it up, and let's just go down to, like, I don't know, something that would make sense. Let's go to maybe 620 or something like that. Or what do you want to do? We are looking at the 655. Would you want to go down to 25? The 25s are 281 bid. You know, that's a 5.5. That's not bad for a 30 wide. Let's take it down to 620. Okay. So we look at this thing. You have the 655, 620, 1 month out. Okay. If we want to do the math, you know, that's a considerable pullback. If you think about it, do you think we're going to get, what is that? If we looked at this, if you're paying $6, yeah, your break even is at 649, and between 649 and 620 you can make 29. That's a good risk reward there, but are we being a little too aggressive there? Do you know?
I don't think so. 5-to-1 risk reward. You're giving yourself a month time period ish, right? You know, we talked about, I mean, we started the show with Marco's tweet, so this could, you know, you could start seeing dividends in this thing pretty quickly over the next couple of days. We've seen the way the market trades post Fed, especially with the setup we have, especially with how overbought everything is. So I think it is aggressive, but you know, I think a 5-to-1 risk reward, I think you almost do that every day.
So the question is, do you just leg into it? Do you not sell?
Well, you know the way I feel about that. I mean, so you can wait to sell.
You got rid of that. You see what I mean?
You can wait to sell the 620s. Like if you think you're going to be right, and you know you have a move in the afternoon today, and you've already locked in the purchase of the put. You know, the 620s that you're selling for $2.50. I mean, you could potentially see that with a low 3 handle, which mitigates your cost even more. So yeah, I think you can leg into it.
Bottom, we paid $830. Okay, so we're just doing that so you guys can see, you know, the ease in which this is going on. So $830, we bought the 659. If you paid $830, your break even is $651.70. Is that good math? No, it's what, 8:50? I literally got off a plane a couple hours ago. I had about 4 hours of sleep on that plane, guy.
Why is that? Is it, well, that's how long a flight is it? Like 7 hours?
Yeah, a midnight flight, which if you do the
Georgia,
that was 3 in the morning. I landed at kind of 8. So you know, I had you know.
Did you have a tie on?
So 6 what?
Did you have a tie on?
No, that's how you do it. All right, so we're in it for some puts here, guy. October expiration. The 659s, we paid $830. You can do the math. We break even at 650 70 650.
Yeah, and look, tomorrow we'll come back, and if this thing is working, we'll look at those 620s again that we could have sold for 230 today, and if it's working, we'll see what they're worth tomorrow. And if that sort of legging into could really work to our benefit, and that's what, look, you could do it as a one-step thing, buy the puts, sell the lower put, and be done with it, or you could leg into it the way we're doing here. So it's a stylistic thing.
All right, we got to talk about this. I don't know if you and I have talked about this open door. Okay, so
there's a question about open door.
Yeah,
so let's
pull that question up. And you and I, we are no good on meme stocks. Is that fair to say? I mean,
100%.
like, just
who is?
Well, the Reddit crowd are like, look what they do to these things. So this stock was left for dead.
It was a 78-cent stock, I think, in July.
I think it was lower, by the way.
Maybe, yeah.
I think it got as low as like 50 cents. So here, let's just look right here.
Oh, you're right.
43
There
cents.
you go. Look at that.
All right. So full disclosure, a good friend of mine is on the board of this company. Okay. This company was SPACed, going back to here, I'll just show you. Going back to 2021. I mean, you could look at this. I mean, this was a meme stock back then. This is a real estate platform. They started buying homes. This is the thing. They supposedly just like literally cleared much of that inventory that they had. It's been a tough market in the housing market. This guy, Eric Jackson, who he just tried to make it a meme stock. And you go look at his Twitter, you'll see what's going on there. They brought back the old CEO. I mean, what the weird thing about this is that normally, and we saw this with GameStop, there was some corporate action once there was a new investor base, but that and AMC, there's really nothing meaningful. There's nothing fundamental that happened. So Open Door, the stock's gone from 50 to 1050, and there really hasn't been much. Now they hired a guy from Spotify. They did, like, to me, why would you, if you were a any sort of reasonable manager, at a real company, why would you go do this? Like, whatever. Whatever. I don't even know what to say about it. Like, have a ball, they're really like this.
Think about all the examples over the last few years, and there've been many where, people get their arms around something and, the fundamentals don't matter. And if people can catch this wave, they're going to do it. And they're going to say it doesn't, the reasons why. When you open your account and you're up money, nobody really gives a shit at the reason. And I'm not, by the way, I'm not saying anything derogatory. I agree with everything you're saying, but people are just trying to game it out, and that's what's happening right now. Of course, the problem is everybody thinks they're going to be the one that's going to get out at the top, but you see how quickly these things can turn as well.
Yeah, I mean, listen, they're probably going to take a page out of the AMC playbook and launch like a meme coin, or you know what I mean? Like, so when you have a meme stock, you got to keep the meme going, and
Right.
So a lot of folks, like, they feel like the more they post on Reddit or Twitter or whatever. And then this guy, Eric Jackson, so he's in Toronto, and I don't know what was going on. People were sending this to me. Like, he was going out and standing outside of Drake. I know Drake is one of your big rappers that you're into.
Love Drake.
And trying to get him to like buy the stock or something. I mean, it's all a bit juvenile. I want to go to Doug Cass. He just heard what we said on the shorting of stocks. Now, let's be really clear. Doug has been in the markets running a fund for decades. He's obviously a very sophisticated investor. He goes long, he goes short. He's very nimble. All right, so this is in response to our comment about shorting stocks. Equities over time rise about 8% a year. As both just stated, the reward of shorting is asymmetric to the risk. If you find a bankruptcy, you can only make 100%. But if you're wrong on a short, you can lose an infinite. Rarely discussed is the risk management is so important. That's so important when shorting. If you short and the short goes against you, it becomes a large percentage of your portfolio. All right, I just want to make one point here, guy. So Oracle is a great example. None of these companies, these mega cap tech companies, they can't get bought out. So you can't walk in one morning if you're short, Amazon or something like that, and there's a 50% premium. So you can't do that. And a lot of folks think that's pretty, the stock's overdone, the valuation's getting this, the competition's this or whatever. I like the idea of shorting this stock. But when you see a $670 billion market cap like Oracle open up 20% and close up 30%, you're living in dangerous times.
Which was the point. Yeah, I agree with you. It's not normal. And by the way, it started in December with Broadcom, and it's happened a couple times since. So it's not; these are not normal markets that we're living in. By the way, my favorite Drake song, in case you care, is "Rich Baby Daddy."
I don't care. I don't.
It's really
care.
a great song. I have it on. It's one of my.
I'm not.
I mean, the only one close to that for me is "You My Everything."
So
and it's not U-Y-O-U, it's the letter
by the
U.
way, I just went to the Google machine, and that's how we figured these out. I'm just telling you that.
I didn't know this.
So I'm a big fan. I'm a big music fan. You're a big music fan. There are two types of music that I cannot stand.
Mm-hmm.
One of them
country.
I can't stand country. I literally can't stand country. And then I also can't, on the opposite side of the spectrum, hip hop to me
Mhm.
is just like an abomination. I do love
I'm not.
M&A.
I'm not trying to be. I'm sorry, Amanda. Amanda. By the way, we're gonna get the butters. I promise in 30 seconds. Um, Rap and hip hop, are they a similar genre, or is that
You know
completely
what?
different?
Maybe CC can put something in there. CC told me what ska was like 20 years ago. I had no idea what ska was. Ska is like a reggae-ish. Do you know what that, Bill, is? Yeah, I didn't know. I saw a guy, we were walking down the street, CC and me, and he was wearing a shirt that said Ska Wars. It meant to be like Star Wars. And I was like, what the hell is ska? And he told me it's some like form of like reggae, hip
Uh-huh.
hoppy sort of thing or whatever. Ska. It's kind of
Yeah.
like EDM. You know how you go to the EDM shows, guy? Electric dance music,
Yeah. No,
EDM.
I was just at an EDM show recently.
Okay. Um,
I
no,
wore
I
my
hate the hip hop and I hate
the
and I'm not a
country.
hater, as you guys know. All right, let's get to John Butters, guys. So John Butters, he is the senior earnings analyst over there at FactSet. He is our main man. He comes on our podcast every so often, but each week he does a write-up. Okay. And you can have it in your email box on Friday mornings, factset.com/insight/subscribe. It is called the Earnings Insight blog. This one's interesting, guy, this week. Okay. And, on CNBC, you and I don't generally talk about upgrades or downgrades. You and I have been in the business a long time. There was a time where upgrades and downgrades from big shops used to move stocks in a big, big way. My first trade ever in 1997, I was long a stock called PeopleSoft that I actually think Oracle bought, I want to say 20 years ago or something. Back then, I had no idea what this company did. I literally, I don't know this. I don't know this PeopleSoft. I didn't know what it does. And I bought this stock probably on momentum and the technicals and this and whatever. And I come in one day and the stock's up 7-8%. It got upgraded, Morgan Stanley or something. Do you remember those days?
Yeah.
Like, it was really interesting, right? And so the guy that worked, good trade. I was like, I don't know, that was a good trade. I just threw a dart at the board, bought a stock, and it was up 8% because some chamoli down there at Goldman Sachs or Morgan Stanley. All right, what is interesting to you about buy ratings, hold ratings, sell ratings?
Well, so for a couple things. So what you just talked about back then is exactly what's going on in today, like names like Open Door. My sense is a lot of people piling into these names have no idea what they do, where they're located, what their businesses are. But the point I try to make is some cases it doesn't matter. I mean, they're just playing the momentum game. But what does this say to me? Well, we've talked about this with Danny Moses. You brought it up. I brought it up. Doug Cassis brought it up. Carter Worth. There's reputational risk associated with being negative on anything, individual stocks, indices, broader markets, whatever it is. And if you're bullish on something, typically there's not the same risk to the downside you face if you're negative on something and it goes higher. And that to me is what this speaks to. So you can look at this quickly. Throw up the next slide because this illustrates it perfectly, I think. I mean, look at all these names. 0 sell ratings for all these names. Now you could say, well, wait a second, guy. They've been right to have 0 sell ratings. Yes, there is some truth to that, but there's safety in numbers. And I think that's what we're seeing right now in the analyst community. They understand what's going on and they're going to be reticent to be holding or selling anything in this environment. And that to me is problematic.
Yeah, and your point is a good one. There's just career risk, right? Like, so you're short Palantir. Like, we know there's guys in Tesla, like I think it was Tony Saganagi, I think I'm saying it right, from Bernstein. Like, he's had he had like a $50. I might be speaking out of school. It was a $50 price target, 100. Like, he was just making a point. You know what I mean? Like, that he doesn't think. So he had a hold rating. There's very few sells on there. One of the things about a shop like Bernstein, they don't have investment banking, right? So they don't have to kowtow to these companies because they're bankers. And again, there's supposed to be this Chinese wall between research and banking. I'm not sure that's always the case. You know what I mean? Because the analysts know what the game is, right? So your point is, if they have a sell rating on a stock and their bankers are pitching to do business, whether it's M&A or a debt raise or whatever the hell it is, you know what I mean? Like, that doesn't help. And then the other thing, when you're a company and you're looking to a higher investment bank, they're always looking at the quality of the analysts who cover that sector, right? So that's another thing. So the buy ratings, it makes sense. So at the end of the day, you have to ask yourself, does it matter if 98% of the ratings in a Walmart or a Microsoft are a buy? Like, what, who cares, you know? So maybe it's the timing of the downgrade. The other thing is like, okay, do you care if some good analyst, you know, has a buy rating? Well, you might care if he's one of 40 that goes to a sell or a hold. There's rarely a double downgrade unless there's like really bad news, but there could be something that is, you know, like something fundamental that he's trying to, or she trying to make the case of, right? So let's go back to the other slide for a second here, guy, because this is generally on FactSet. If you just pull up, throw a dart at most tickers, right? This is what the breakdown looks like, right? So 56% of the ratings of the S&P 500 stocks are buys. These sectors have more than 60% buy ratings: energy, technology, communication services. Two sectors have less than 50% buy ratings: consumer staples and utilities. Let's speak to that for a second. So you don't really need to kind of put yourself out there on utilities and staples, because you know folks are going to buy them no matter what the ratings are, right? When you get into one of those rocky periods in the market. Does that make sense?
Sorry about that. It absolutely makes sense. And yeah, I look at this, and this a lot of times Butter's work surprises me. Like, I'm like, wow, I didn't see that one coming. This one, not so much, because as we started this by saying, we understand sort of what the game is and how people are playing it. So, I tell you what, the most interesting analyst calls to me are the ones that theoretically come prior to an earnings release. And, whether a stock that's been on its ass and somebody upgrades it to a buy, or vice versa, a stock that's had a parabolic move into earnings and somebody comes out ahead of it and says, you know what, the run's too much, I want to get ahead of the earnings release, and I'm downgrading it to hold or sell. Those to me are helpful. Doesn't mean they're going to be right, but at least it shows some sort of thought. Just, again, being with the crowd to me doesn't really help anybody all that much.
Yeah, and I think that's a great point. It's just like, if there's 98% of the analysts who have a buy rating on it, if somebody comes out before an event, whether it's earnings or some sort of analyst meeting or product launch or something like that, it's one of those things that makes you kind of perk up and listen and rethink a little bit of your thesis. I know we got to get out of here, guy. I just want to pull up one. There's an analyst, I don't know who it was, raised their price target at Walmart. Again, price target, different. So let's just wrap this up. So this is John Butters. This is his fine work. He's the senior earnings analyst at FactSet. He writes the Earnings Insight blog every week. We do a preview on Market Call, but you can have it in your inbox, factset.com/insight/subscribe. We love John. We love Butters. We love everything about him. So go subscribe.
We do.
Yeah.
And we love the fact that he's probably at Lake Winnipesaukee right now.
I mean, that joke, 98% of our viewers have no idea. What
I don't really know what it means.
But you just like saying Lake Winnipesaukee. What movie was Lake Winnipesaukee about 35 years ago probably really put in the zeitgeist?
Oh, you got to help me. I don't know if I know this.
What about Bob with Bill
Who's
Murray?
Bob? I don't know. Yeah.
I don't know this Bob.
I don't know this Bob. I don't know what he does. That's a great scene.
Lake Winnipesaukee, I'm pretty sure. All right, let's get out of here with this one. Walmart was at the top of that list from Butters thing. So we had been talking about the fact that this stock had never confirmed the new highs in the S&P 500. You had that earnings, I want to say, a few months ago, you had the stock at all-time highs. You had a gap lower. That's not something you generally see in Walmart after earnings. But not only that, it barely saw an uptick, you know what I mean, for the next 3 weeks into that kind of tariff situation. But it really had been consolidating below that gap level. So it held that 200 guy. It just got back down there. Here we are. It looks like, are we at an intraday new high or no?
Yeah, we are. And I think we are. And, you're going to draw that horizontal line across the top. So today's close is important without question. And if it exhausts itself here, I'll be the first to come in and say, it's wrong. But I'll say this. We also had a slide about delinquency rates, and the credit scores of people have been trending the wrong way. And we can pull that up if we have it. If we don't, I'll speak to it. Who wins to that? Walmart wins to that. And I think part of the reason the stock is going higher is on the back of that, and people getting encouraged by their business model. Valuation has been expensive for a long time. I think they have done a really good job with AI in terms of helping their margins, and they win in this environment. Like them or not, they win. Target loses, Walmart wins, and I don't see that being broken anytime soon.
All right, we got a Fed meeting today. We got a Fed presser. We have dots. The Fed is under assault. Make no mistake about it. That's not a political statement. You know, the independence of the Fed. There's things going on here that you and I have never seen in our career about an institution that is meant to be independent. And I guess we've been talking about this guy, it feels like, for months and months now. The White House, you know, this entire year has been all over Fed Chair Powell. They want rates lower. They're going to get it today. I think you were going to say, be careful what you wish for.
You know what I like to say in situations like this, Dan, is be careful what you wish for. And before we get out of here, you know, Dan's in this pool where you get $250 to play with, and each NFL team has a value associated with said team. And you can short one team, and basically, if you short a team, you have that much more money to play with to build your team, if that makes sense. Well, Dan shorted the Kansas City Chiefs, the highest valued team on the board, along with the Eagles, at $70. And the Chiefs have started this season a robust 0-2, headed to New Jersey this week to play the Giants, who are coming off a devastating loss. But you know what?
What's the line on that game?
I think the Chiefs dropped to 0. By the way, I think it's 12% of teams that start 0-2 make the playoffs in the National Football League. It stands to reason that if you're 0-3, that percentage only goes lower. So keep that in mind.
Last year, the Chiefs lost to the Eagles, but the prior 2 years, they won the Super Bowl, right? So if they started 0-3, that'd be really interesting. So just to real quickly, so basically the odds of these teams getting to the Super Bowl, the guy who runs the pool assigns a dollar value to those. Like, so the highest was, I think the Eagles was like $70. The Chiefs were like $65. You had me short the Chiefs, okay? And then I was long, I think, the Ravens, the Eagles, Buffalo, Niners, and there was another team.
I want to say you took the Rams or the Lions.
Okay, so I had 315 to play with because I shorted the KC at 65. Every single game I won last week.
Bang.
So, bang.
And
bang,
you know what?
bang.
And you know what my man Drake calls that? Hotline bling, baby.
I don't even know what that is. Is that like a name of one of his songs?
Did Bill hear that? Bill's
I'm a I'm a Beasties fan. Like Beastie Boys is they're my jam. Beastie Boy. I love Eminem. I think Eminem is probably one of the most brilliant musicians of our time. Matter of fact.
Is he a musician? No, I'm not. I'm actually. This is a serious
you know him as Marshall Mathers.
No. I yes, but is he a musician?
Yeah.
What do you mean
he's not? What are you talking about? He writes mad rhymes.
Okay, I mean, musician is somebody that plays
artist,
the piano,
musical artist,
or he plays the flute, or he plays the drums or the guitar. That's a musician.
She just said, "Okay."
And she wants us to go. I'm sorry, Amanda. Okay. By the way, Amanda's doing great. She said, "Okay, let's wrap."
All right,
wrap.
So check out our Risk Reversal podcast. It probably drops 4 or 5 o'clock today. We're going to do a rundown of everything that we saw there. You and I are going to be back tomorrow on the market call. Liz Thomas will be with us, which will be very exciting. And then you and I are sitting down with Michelle Mayer. She's the chief economist at MasterCard. This will be really interesting because we just highlighted some of those FICO scores and that sort of thing, and we can see some of the stuff that they're seeing. So that'll be really interesting, and that'll drop on Friday morning, Guy.
What else can you ask for?
Nada.
You see it? No, you don't.
It's lunchtime, baby.
That's from Talladega Nights.
Yes, it is. All right, peeps. Thanks so much. We'll see you tomorrow. Market call. See you. Bye.